In this week's Robinhood breakdown, we're analyzing why the Santa rally did not happen, why the reindeer apparently refused to pull the market higher, and what kind of drama could be coming next for one of the most chaotic brokerages on your phone. Welcome back to Fintech Spy, where we don't just trade the volatility, we zoom in on it, overanalyze it, draw 3 different fib levels, argue with ourselves about risk management, and then make fun of the whole thing. If you're new here, hit that subscribe button for more chaotic fintech breakdowns, terrible market analogies, and occasionally accurate memes. Let's hop right into Hood. Quick reminder, I am not a financial advisor. This is not financial advice. If you're making real trades based on a parody segment, you probably shouldn't be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. Let's start with the weekly chart, our medium-term view. On the weekly chart, Hood is still stuck in that stubborn downtrend, serving up a pretty pathetic-looking candle last week. It's the kind of candle that makes you zoom out to the monthly and say, maybe I'm a long-term investor now. Under the hood, the stock RSI is trying to close the gap and curl back up, while the MACD is extending its bearish gap like it didn't get the memo about New Year's resolutions. One momentum indicator wants a bounce, the other still wants pain. Classic tug-of-war vibes. Which one is going to win? For now, the weekly chart says we're in prove-it mode. Any bounce off these levels has to show real follow-through before we upgrade this from falling knife to maybe a slightly less dangerous knife. Zooming into the daily chart, our short-term view. On the daily chart, we might finally be seeing a slowdown to that relentless downslide. Friday's candle was technically red, but just barely, closing only 7 cents down. For a ticker that's been getting bullied by gravity, that kind of tiny red feels more like a pause and think about your life choices candle than a full send to new lows. We also had around 26 million shares in volume, which is a lot of downside energy to absorb and potentially flip the other way if buyers actually show up. When that much volume pushes price only slightly lower, it starts to look less like a crash and more like a tired trend catching its breath. MACD and stock RSI are both hinting that we might be gearing up for a reversal. Not a guaranteed rocket ship, but at least a chance for Hood to stop tripping over itself every session. Short term, the daily chart is basically Hood standing at the top of the stairs deciding whether it's going to fall down them again or finally walk like a normal stock. Next up, the 4-hour chart, our intraday view. On the 4-hour chart, we can see the daily story in high definition. We had a deep red move intraday, but then a pretty solid recovery that made the chart look less like a disaster and more like a panic attack that got talked down. The MACD on this time frame is starting to hint at a possible turn. That turn, this frown upside down moment where intraday momentum quietly flips before anyone on FinTwit updates their hot takes. If that crossover actually follows through, the 4-hour could be the first place we see a real short-term trend change instead of just another dead cat bounce. For intraday traders, this chart basically says, expect drama. Sharp moves down, sharp squeezes up, and a lot of emotional damage for anyone who forgot to set stops. Let's talk options, because nothing says emotional damage like weekly contracts on a volatile name. Looking at the January 9th options chain, the market is pricing in about an $8.13 implied move up or down for the week. That's Wall Street's polite way of saying, this thing can still swing like a meme stock if it wants to. When you dig into the open interest, the bias is clearly leaning toward the call side. On the puts, the biggest chunk is sitting at the 110 strike with around 3,000 contracts. That's your standard, just in case it gets ugly, hedge crowd. Meanwhile, on the calls, things get a lot more enthusiastic. Roughly 6,000 contracts at 120 and about 10.5 thousand sitting up at 125. That's a whole squad of traders basically manifesting a face-ripping reversal. A run-up toward 125 would be a serious shift in narrative. From this downtrend is bullying me, to wait, am I suddenly early and smart? The chain overall paints a picture of a market that's nervous but hopeful, hedged on the downside, but clearly dreaming about upside. So what's the outlook from here for Hood? This holiday stretch has been less Santa rally, and more Santa forgot your account and left you holding red candles. If you managed to trade the ranges and snag some bounces, congrats, you survived the volatility roller coaster. If you didn't, you participated in the time-honored tradition of donating premium and refreshing your P&L like it's going to apologize. Big picture, Hood still looks like a high beta story stock trying to decide what it wants to be when it grows up. The weekly is stuck in a downtrend, the daily is flirting with a slowdown and possible reversal, and the 4-hour is where the chaos lives. Sharp dumps, sharp recoveries, and plenty of chances to question your life choices. Whether this setup becomes a real trend change or just another fake-out rally is up to the market gods, the macro data, and how many traders wake up and decide today is the day to yell, fintech to the moon again. If you agree, disagree, or think Hood is just coiling for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below: coffee, memes, or pure denial. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech spy microscope. No guarantees on price targets, but we will provide world-class over analysis and high-quality sarcasm.